Right, here we go. I really don't know how to add a music. There was a way that you could add some music. That's interesting. So, Kyle, um, we were talking about bonus depreciation uh, for for state level.
Yeah, there's only a few states that allow bonus depreciation at the state level,
Yeah,
like less
it's
than 10, and they're all like unpopulated states.
interesting.
Interestingly, they all
Mhm.
almost all of them are oil and gas states or heavy manufacturing states, which is what
It's
you'd expect. Like Iowa, those farm combines are really expensive, so they let the
mhm.
farmers write them off. Probably the same with Missouri, Nebraska, and then the other states, New Mexico, North Dakota, Louisiana, those are states with large oil and gas industries. That makes sense.
Interesting. I mean, I don't think it affects IDCs, but that's a topic for another discussion. Hi everyone, thank you for joining. We'll have people joining in, so we'll give another a minute or two, and then we'll jump into the webinar. Um, but feel free to mention where you're joining from. This webinar is particularly focused on our existing client who bought the project. So I'm pretty sure I've chatted with, uh, not with even if not with all of you, with most of you. So, and I'm going to introduce Kyle to start the webinar. Let's see, interesting. Do you think, Kyle, there's a correlation between having states that are focused on oil and gas and having a bonus depreciation?
Yeah, that's the way it looks. I mean, again, not many states offer bonus depreciation, and the ones that do are either oil and gas states, which makes sense,
Mm-hmm.
or farming states. And those combines, man, those things are expensive. Those big farming tractors are hundreds of thousands of dollars. And so
Interesting.
that kind of explains that. Whereas New York, Illinois,
Yeah,
California,
California.
more like
Yeah,
financial services and entertainment, eh, there's no bonus depreciation going on there.
that's interesting. Financial services and entertainment.
Yeah.
Never thought of it from that point of view, but interesting. I think we'll give everyone another minute, and then we'll jump in.
Right.
We have people joining in. Again, feel free to mention where you're joining from, and again, chat with most of you, so it'll be good to see familiar names. All right, so we'll give another 40 seconds, and then we'll start. Um, I am. Hey, Amanda. Good to see you. Good to see you. It's been a it's been a while since we chatted. But it's good to see someone from California. Hey, Vishnu. Um, we chatted last year. It was late, but good to see someone from Georgia as well. Um, all right, so we're on the clock. So let's get started. So thank you everyone for joining another webinar with Valor. Um, this webinar is particularly focused for existing clients who bought projects in 2025. And first of all, I want to congratulate you all for making the purchase, setting up your renewable energy business. It's a first step towards tax mitigation. Also, the good news is, and we've sent the confirmation email that all the projects are placed in service on the time. Thank you for trusting Valor. Thank you for trusting the developer that we work with. And the core idea again for this webinar is, or broadly at Valor here, is that how can we make the process seamless for you to either make the purchase, communication, or getting to the core value proposition of it. If the solar projects were bought, again, the major catalyst was the tax credits, depreciation. There's a long tail of cash flow. Is to make sure how can we provide you a very good experience, and that's what this webinar is focused on, to make sure there was a one part of the process was buying the project, getting the project towards mechanical completion. The other part of it is now the reward time, right? Getting those tax incentives, and getting any refunds out of them, and that's where we're focusing on today's work. Now, before we dive into the agenda of it, I just quickly would like to introduce myself. Most of you probably met me when we're the other. Farhan Akhtar, I'm the head of auditing and planning here at Valor. Been with Valor for 3 years now. We have Kyle joined. You may not be familiar with Kyle, but Kyle is all thing expert on tax side. um, Kyle is very much focused on the trust side of things and the state planning. He is not much focused on the solar side, but he knows a lot of stuff about tax filing and is going to be helping me. And Kyle is going to be answering your questions as we go further into the webinar. There is a possibility we may know the answer of one or two questions that might be very nuanced. And we're happy to get you the answer from the developer, happy to bring in their accounting team and make sure, again, at the end of the day, that you file your taxes in a seamless way and you get the incentives that you're hoping for. So very quickly, let's get started. So what's the agenda for the webinar today? This particular webinar is focused on kind of giving you an idea of what's coming, when is it coming, and how to plan for it, right? Again, focusing majorly on the tax filing season. What are the timelines? Where are you going to receive? When are you going to receive? Between the different projects bought by different clients, how you're going to file the taxes. We're going to give you a higher level walkthrough of the K-1, what are the tax forms and everything. And then we'll be able to answer most common questions, right? At the end of the day, again, to summing it up, make sure that you have everything that you need for the tax seasons. Everything is stuff compiled, you're ready to go. You give it to your CPA, they have everything that they need. And in case they have any questions, they're welcome to reach out to us at any point of time. Welcome to reach out to the developer accounting team and make sure we get you sorted. So first thing, timeline and logistics. What needs to happen now on the 25th of February? What needs to happen in March? What needs to happen in April? Anything before the deadline for tax filing. And what needs to happen now, and there is a particular slide on this that we're going to focus on in very detail, is the first thing is most of you have done material participation because because you would like to use the tax incentives against your active income. And for that material participation, the major thing that you want to focus on is making sure you have a log of it, right? At the end of the day, and again, I'll talk about this very detailed in the next slide that we have. At the end of the day, you're not required to submit anything to IRS. Your IRS doesn't require you to have a detailed log. I mean, it's not a requirement, but it's a very good practice to have everything in one place, right? All your activities that you have performed, so you can pull them out whenever you need them, rather than scrambling through your email and everything. And we'll talk about the Valor's platform on that. Once you have all this stuff, right, at this point of time, compiling your material participation log, having your performa that was sent to you last year by the developer, so you could estimate how much credits and depreciation that you're going to be looking at this year, right? There's always going to be a slight, plus minus 2-3%, but mostly you'd be looking at the performa would give you an idea in terms of the actual amount of credits and depreciation. Once we go into the March, once you have everything there, we'll go into the March, and what we'll be looking at is you're expected to receive K-1s from the developer. That is the tax form that you'll be looking. Again, we'll go into the details of it, but you'll be receiving a K-1 from the developer from mid till late March. Once you have those K-1s, and those K-1s will be sent to you by a developer through a secured link. Once you receive the K-1s, you're welcome to send it over to your CPA. We'll also have another webinar that's coming on April 1st. And the idea for that webinar is, this one is kind of giving a walkthrough of how the process works, what to expect, when to expect, and everything. And that one is going to be particularly focused on when you'll have the K-1s in hand. You'll have the tax form that lists the credits, depreciation, the cash flow, and everything. And if you or your CPA has any particular questions, we'll be focusing on those questions. We'll be taking particular questions, use cases. We'll give you in a box, a complete walkthrough box by box for a particular K-1, and they'll walk you through. Make sure, again, at the end of the day, the goal is to make sure you have everything. If you have any questions, we're there to help you out. And then before April 15th, you'll file your taxes. If you're filing extension, that's another case, but we want to make sure you're prepared for that. Kyle, did I miss anything?
No, that's Yeah, that's a pretty good complete list you gave.
Perfect. So there's a question from Yan. Are the partnership returns due on March 15? Kyle, want to take this one?
Well, they're due March 15th, but then there's also the IRS also allows extensions until September 15th, and so it's not uncommon for partnerships to be extended until September 15th. And the states accept, most states, all states offer extensions, and the partnership will take care of any extension it's going to file.
Got it. Thank you. Good answer. Focusing particularly, so another slide, focusing on, so we have clients, most of the clients are focused on the flip partnership structure. There is a question from, yeah, Supreet, happy to send over the recording. No problem at all. And again, I'll send over my calendar link in case you want to schedule something pursue with me, but happy to send over the webinar recording. So shifting gears in the essence of time, flip partnership versus 100% ownership. So we have clients who bought flip partnership projects. We have clients who bought asset purchase projects, and we just want to focus on what to expect on the flip partnership. On the flip partnership side of projects, standard prepaid PPAs projects, we are looking at is, since it's a partnership between your entity and the developer, what you're looking at is a K-1 from the developer. That's what this is the particular tax form that the developer is going to send you as secure link. Now, that K-1 is going to list your losses, income, and it's going to list your ITC based on the 99% ownership that you have. And a quick recap here is, in a flip partnership structure, you own 99% of the assets for 6 years. So you are entitled to 99% of the credits, depreciation, and all the cash flow that is. So the K-1 is going to list all of that. We'll cover in the further slide, from K-1, how is it going to be directly goes from your K-1 to your personal return. But just to give you a high level idea that on the flip partnership side of it, what the tax form that you're looking for is going to be the K-1 from the developer. Then it flows through from K-1 to Schedule E, from 3468 to 3800. We'll talk about it in a minute, but that is the broad level tax form. On a project where you have 100% ownership, there is no partnership return that you're expecting from the developer because it's not a partnership. You own 100% of the asset outright. Now, what you would expect from the developer is going to be Excel workbook that's going to list your credits based on the asset purchase. That's going to list your depreciation and any kind of income. And you would give it to your CPA, and your CPA is going to be able to use that and is going to put everything on Schedule C and Schedule E, depending on whether you have a single member LLC or a multi-member LLC. So the distinction between, on a high level, between a flip partnership and a 100% ownership project would be that with the flip partnership project, what you are expecting from the developer is a K-1. And in a 100% ownership project, where you're expecting from a developer is actually a worksheet that would list your credits and depreciation, which you would give it to your CPA, and your CPA would be able to, put it on your Schedule C, Schedule A, depending on the entity structure that you have in place. Kyle, am I correct?
Yeah, that's right.
Perfect. So that is, again, happy to answer any questions. Feel free to add in comments on the comments box. Happy to answer any questions over the email. I'll send over the link to schedule a call. But that is the broad level idea. Now, moving on to the next slide, which is so there's a question from Paul. What are the typical project sizes for EV chargers? That's a very good question. So we're on the EV chargers, the minimum ticket size is around 200K. There is an element of where the credits with EV chargers are going to be gone in July of 2026. So it's a very different angle, but if we're talking about the minimum purchase amount, we're looking at around 200K this project. Shifting gears, focusing on what you will receive. And in a flip partnership, because most of the clients were focused on that, on the K-1. Kyle, would you like to take a lead on this and cover the box and box 2?
Okay. And so it's going to be, the tax reporting for this is not going to be complicated. you're going to get a K-1, and it's going to have only a handful of lines on it. And the lines on the K-1, the boxes, the information on the K-1 correspond to the same box numbers on the tax prep software. The credit's going to be, for instance, on line 15 of your K-1, so kind of upper right-hand corner, and it's going to have a code. So if you're doing your return yourself, or if your CPA is doing it, they're going to enter your line 1 loss or income from line 1 of the K-1, and then they're going to enter the tax credit and the basis and select the appropriate code from a drop-down menu. Then the software will do the calc. And so from there, you go and you look at your 3468, which is the first place the credit goes, and you see, okay, my credit's coming through. And then if it's there, it'll go to the 3800. So you go look at your 3800 and make sure it's there, and it should be there. And then from there, you go look at Schedule 3 of your 1040, and you'll see your number there. I think it's near the top of the form. And then from there, it goes to page 2 of your 1040. And so it's not a complicated input or review process. As far as alt-min goes, you're not going to have any alt-min related to the bonus depreciation or the credit itself. You might have a small amount if it's kind of a big project and bonus doesn't cover it all. I wouldn't expect that.
I wouldn't expect any. Yeah, same thing.
Yeah, you're not going to have alt-min problems from a tax credit deal.
Got it. That's very helpful. It's comforting to know. It's a relatively easy process. Again, at the end of the day, we just want to make sure that you're teed up. You have everything that you need from us from a guidance standpoint, and everything that you need from the developer standpoint to have it. But at the end of the day, it's not that difficult. I think that's what Kyle is saying. Again, feel free to add any questions that you may have on the question box. I'll put them on the screen, and then we can discuss them. This is the interesting piece that I want to talk about, which is documenting your activities. Again, we talked about in the start regarding material participation, right? Most of you, all of you have done material participation. At the end of the day, whatever you have done, you just need to make sure that you have everything in one place. And that's where Valor comes in. We have the solar marketplace. I call it, solar activities tab, which I call it a virtual file cabinet. In case you don't have an access to, you don't know how to use it, we're going to be sending out a guide on Monday, Tuesday next week. That's going to list, that's going to walk you through how to log the activity on that specific platform, how to use it, how to upload documents, how to add explanation, everything. And if you don't have an access to it, you could request access to it. You could use it. So the guide is going to be there. It's upcoming on Monday and Tuesday. So watch out for that. Again, shifting gears, coming back to particular activities. So at the end of the day, you just want to make sure you have everything documented in one place. And when you do get access to Solar Activities tab, and if you already have it, if you're already doing it, that's great. And if there's anything missing, feel free to add there. And at the end of the day, when you go and log stuff, you just want to link everything back to the business case. So if you went on a site visit, you could add flight reservations, hotel bookings, pictures of you being there, right? You have done a call with the developer, you reviewed the project plan, set pictures and everything. You just want to make sure everything is there in one place. And in case your CPA wants to review it, you could just always send it to them, get them a link. But at the end of the day, you just want to make sure from your standpoint, all the activities that you have done in the last calendar year, you add them, you log them there. And I want to emphasize on this point again, none of this is required, right? It's all a good practice to have everything in the one place. You can always go back, you can edit the log, you can add the stuff in case you forgot to add something. Again, we'll get you the full guide and I'll walk you through it, but we just want to make sure that you have everything logged in one place so we could get you whenever you need it. And in case your CP asks for it, you have it there. So that is it. Kyle, did I miss anything? I don't think
No,
so.
I think we're good so far. Yeah.
Perfect. I think we're running very very quickly. This is the first time we're going to be completing a webinar on time. I'm very excited. How do we download the activity? So it's a very good question from Tapan. So the way currently it's working is it doesn't allow you to download the form. So our product department is working on it. But what you can do is you can just directly reach out to us. I'll drop a link, solar@valor.com, and you could just tell us that you need the log, and we'll send you an Excel file that's going to include your activities, how much time that you have spent. So unfortunately, it's not downloadable currently on the platform. It's a very good feedback. We're already working on it, but if you need it, we don't want to prolong the process, unless we have the feature, and then we'll give it to you. You could just directly reach out to us at solar@valor.com. I'll send over the email, and we'll download the log and we'll send it to you via email. But it's a very good question. I think we talked about this, Kyle, particularly on Form 3468. But is there anything in particular that you want to? I think it talks about what flows from what, but just in case
we covered most of this. The one thing we didn't cover was the Form 8582. So that item on the bottom, if you mark the activity is having material participation, there's not going to be an 8582.
Yeah, right? So it's not relevant to most of the people.
Okay, that's what I was thinking.
Yeah.
But if you do, if your activity is passive, now you're going to have an 8582. And so real quick, what's going to happen is your credit's going to go to the 3468. If there's a loss, it's not going to go to the 3800. It's going to get, it's going to stop there, and it's not going to go to your 1040 because you have this loss on your 8582. So if you have an 8582 of the loss, you're not seeing your credit coming through, go look at that 8582. And if your participation is non-passive material, go check the box. Your CPA understands that. We talk about that stuff all the time.
That's a really good call out. That's a really good. I didn't thought of it that this could be one thing, but it's good. It's good, I think, for to call that out just in case you don't see it there. The other thing, and that's more, it feels like a footer at the bottom of it, is the one thing we talked about in our calls is EBL, Access Business Loss Limitation.
Yeah.
Right. So and I think for last year it was 626K. And just for everybody's context, again, just a quick recap is the IRS allows you to use the depreciation or losses from business activities like solar, how much of the losses that you could use against your non-business activities, right? Which is your W2. And the limitation for last year for that EBL was around 626K. So the maximum amount of depreciation that you could use from oil and gas and solar combined was 626K. Now, in case you have any depreciation that is you have more depreciation because, I don't know, your tax liability change or anything, your size is bigger, any kind of access losses would get carried forward to this year. And the interesting point here is that they're not going to be subject to EBL this year. They become an NOL, net operating loss. So any kind of depreciation, again, I'm just going to say it again. Suppose you get a $2 million worth of depreciation, I'm just making numbers up here. You could only use 600K. Let's just use round numbers. Let's just suppose you could only use 600K last year, and you have a $1.4 million worth of depreciation that is being carried forward this year because you couldn't use it for whatever reason. That is not subject to EBL this year. You could use all of it this calendar year. And that makes it a very powerful strategy when you look at it over longer, 2-year time frame. And it's a separate discussion. But in case you have anything, you could have credits carried over, you could have depreciation carried over. But in case there's any depreciation that's being carried forward to this year, it's not going to be subject to EBL. It becomes an NOL, and you could use all of it this year. Anything I missed?
Well, on your NOL, so as Farhan said, that first year you have your EBL limitation, and that amount, if any, that gets limited carries forward as an NOL. There's an 80% of AGI limitation on your NOL,
Oh yeah,
but for most people, that's not going to apply because you've got your other non-passive income. That's kind of more of a business owner
got it. Got it.
limitation.
That's a good call out. I literally forgot about that, but it's way better than having it subject to the EBL, right? Which is, well, inflation works upward. This year it's working downwards. I don't know. We're what, 512 for this year, 626 last year.
Yeah.
So economy is doing pretty well. We have a question from Paul. And is that a one time in 2026, or will it go forward for projects put into service in 2027? This is a very good question. My interpretation of this is that is the NOL that we're referring to is subject to EBL, or is it the 2026 thing? Or if you have an NOL this year, and if you buy another project that gives you the depreciation this year, are they both not subject to EBL, or one is subject and the other isn't? That's my interpretation of the question, so I'll answer it based on that. Feel free to add another comment if your interpretation is different. The NOL from last year is not going to be subject to EBL. It's subject to the limitation that Kyle just described. If you buy another project this year, the depreciation that project is going to generate and will be allocated to you would be subject to EBL. So you have to treat two things differently. The projects that you buy this year that produces the depreciation this year is subject to EBL. But if you bought a project last year that gave you more depreciation that you couldn't use last year and you had to carry forward, that now becomes an NOL. That is something that is not subject to EBL. It's subject to different limitation. Does that clarify your question, Paul?
I also wouldn't expect any major tax legislation for the next few years, so we might have some stability there.
Yeah, I think it raises another question of which we get a lot is how long the strategy is available. And so there's, first of all, for everybody's context now, okay, so there is a question from Paul. Let me answer this one. For a large project purchased in 2026, can NOL carry forward in 2027? Right. Yes, that's possible. Kyle?
Yeah, you can carry those NOLs forward for 20 years.
Yeah.
Federal, your state rules might be different.
Yep. And EBL for this year is 512K, everyone. It's lower than last year. There's a delta of what, 110,000 plus. So, again, it's supposed to go upward.
That was new tax law stuff, and the offset, so they don't make the budget projections look so poorly. So that wasn't in any kind of inflation adjustment that's going to be repeated. That was tax law.
Interesting
decision.
Okay, so particularly, and this is something that I wanted to focus on is the OBB, right? There was a lot of speculation, a lot of questions about where are we heading, how long the strategy is going to be available. And now that we have the tax bill that has been passed, this strategy, and there are two dates. Well, one date is that you could do the strategy every year till 2027. So if you buy the project this year, you're going to be subject to credits and depreciation. You buy the project next year, you would be entitled to get the credits and the depreciation as well, as long as the project is placed in service next year. And also there is a safe harboring clause in the OBB, which allows developer to secure the material, before July this year. And they can build those projects after 2027. So they could build them till 2030, 2031. So this strategy is going to be here for another 6 years. Well, 4 or 5 years, right? We are in this for the long haul. It's going to work. the developers that we work with are working on the safe harboring. So again, some version of its solve is going to be there with the similar returns. There were the tax credits that went away last year in December was for homeowners who were buying the projects for themselves, right? Not a project, but a solar system for their own house, where they were claiming 30% rebate. I think it was under Section 30C, something different. But the projects that you bought are under Section 48E, and they're going to be here for a longer period of time. So I just wanted to clarify in case that question comes up. So Paul's question is, so basically 2026 and 2027 are subject to EBL, but access NOL for 2026 project applies in 2027, and access NOL for 2027 carries forward to 2028. That is right. Absolutely right. Perfect. It was a very good questions, Paul. I think it conveys there's this element of where you could buy a bigger project in 2026, and if you're gonna have a higher taxable year in 27 as well, right? For whatever reason, you could buy a bigger project in 26, and you could push the losses to next year, right? Considering you're buying a book project, and they wouldn't be subject to EBL. Right, it's another NOL strategy which happy to discuss, but it's a powerful one, definitely. In the essence of time, so this slide is going to focus on state filing. Me and Kyle were chatting about it at the start of the webinar about the bonus depreciation state level, but we're going to focus on the state filing. I'm going to let Kyle walk you through what to expect on the state filing side of things. I'm going to focus on what the developer accounting support and how they're going to help you with the tax filing. So Kyle, you want to take the lead on the state filing?
Okay.
Please?
So for the most part, you're not going to get the big bonus depreciation write-off on your resident state tax return. As far as multi-state, a multi-state filing requirement, if you have taxable income, we're assuming that the solar project is outside of your resident state. If you have taxable income in that non-resident state where the solar project is located, you're going to file a tax return in that state. You're going to pay tax to that state, and you're going to get a credit that typically covers all of the tax paid to that non-resident state, but not always. And in the not always situations, it's usually just a small amount that you end up getting double taxed on. But it's not going to be significant. If you have a loss in that other state, you don't need to file a tax return if you have a loss. We can get much more technical. I can explain when you would have to file for those prior year losses, but if you have
I don't think.
Go ahead.
I don't think we need to get into too much into the details. I think there's another webinar that is scheduled that will be focused on, again, walk through of it. It's just a broader idea of how you would need to think about it. I think moving towards the developer accounting support. So just for everybody's context, the developer keeps an accounting firm on retainer, and the idea for that accounting firm is to help you with the tax filing, with any question related to you have any questions, your CPA has any questions. So they're always there to help you out. Again, me and Kyle are always going to be there to make sure, right, you need whatever you need from us. But if there is anything nuanced, if there's anything that is sort of out of our scope of things, the developer accounting support, that's always there for you, and without any cost. We're happy to connect you with them. We're happy to schedule a call with them. And again, this can be this is the busiest time of the year for CPAs, so we just want to make sure that you have everything that you can send it to them. But in case still they need a call, they need assistance, they have questions or the email, that they are always there to help you out. And that's why we kind of created this two webinar. One is to kind of give you a walkthrough, make sure what to expect, when to expect, how it works. And then the second one is the detailed walkthrough. You'll have your K-1 tax forms in your hand, and you'll know what kind of picture you're looking at. And then, we'll take the questions based on that, and we'll have 15 days in between in case, if you have any questions that needs to get answered from the developer, that needs to get answered from their accounting firm, we'll be here to schedule that. So that is the idea. Now there are common questions. We can. So the first one is, what if my K1 is delayed? So there's two things here. One thing is obviously what Kyle was talking about, and Kyle, feel free to jump in here. Is that it's not uncommon for people to file extensions. So there's always extension that you could file. You could file your extension based on your personal tax situation. So that is one thing. The other thing is that Valor will communicate proactively. If we're again, before we get on the webinar, we confirmed it with the developer that the K1s are on time. It's the same timeline they were talking about, mid to late March. But in case there's something, if there's any kind of delay, we're proactively will communicate to you like we do always in case something is coming up. So that's always going to be there. Now, another questions that we added in there is, how do we know the ITC amount is correct? And I think that the quick reference point is always going to be in is the performa that you receive from the developer. That will give you a highlight of what was the purchase amount, what was the expected return, and everything. And you can always use that as a reference point and match it with what's listed on the K1 and everything. That will give you an idea of this. There's a question from Tapan. Please provide with the contact info for the developer contact form. I'll share that info, Tapan. No problem at all. Kyle, what should someone do? My CPA isn't familiar with the solar partnership. What do I do?
Well, we have the sample, and the part to show how the credit should flow through the return. The part the CPA might struggle with is the 3468, the 3800. We've got samples of those. It's not hard to do the reporting. Give them our samples.
So I think Kyle brought up a good point. So after the webinar, we're going to send you a link to a blog post and I think a PDF. Think of it like a guide that you can use to file the tax. It has all the tax forms and it covers how box by box, how one thing flows from one form to another form. And this is something that we're going to send a follow-up email after the webinar. So in case you have it, you're welcome. I think it goes back to the question of, what if my CPA isn't familiar with it? You're welcome to share it with them. I'll have everything that is there. And again, me, Kyle, accounting team is there to help you out. But the reason for putting the blog post is to avoid the back and forth. Again, it's very time sensitive for CPAs at this point of time in the year, is to have everything in one place, share it with them so you have it. And if they have any questions, they're welcome to reach out to us at any point of time.
Yeah, and remind them that the participation is material.
Yeah, participation is material. Can I file an extension? Kyle, you want to take this one? I mean, you could file.
Oh, yeah. Lots of people do extensions. I would say more people who use prepares file extensions than don't file extensions. Like Farhan is written in the Q&A bit, just make sure the balance due is paid. Well, how do you do that? Well, do an estimate of your tax return. See if you think you're going to owe money. If you are, pay the balance due with the extension.
Got it. That's very helpful. That's a very good call out. So what's next? I think I think it's the second last slide. So we're heading towards the end of this webinar and, really appreciate everyone's time here. I think what next is, if we think of it from a checklist standpoint, is to make sure, right, we'll get you the access and we'll send over the guide for the solar activities tab. So you can access it. You can register for solar activities tab. You could create your log, put everything there. If you already have access, just make sure whatever activities that you have done, you log it there just in case you have it. So that would be the one thing. We'll send you the link to the blog post where it covers how to take a K1 and what flows from K1 to what form. We'll share it with you. You are welcome to share it with your CPA. You can send it over to them in advance so they know, what they're looking at. And, again, if there's any question, we're happy to help them out. But I think the blog post is gonna take them a long way and, avoid the back and forth. Then the second thing would be third thing would be just attend our other webinar, which is coming on April 1st. Again, this one is slightly higher level. We just wanted to make sure we convey the deadlines and the logistics and how to think about it. And the other one is going to be more focused towards the particular walkthrough of the K-1, looking at particular situations, answering any nuanced questions and everything. So that's where we'll be focusing on. So you are, we'll send over the link for the registration for the other webinar. So make sure you join that. And the last one, again, once you receive the K-1, make sure if you have any questions, again, use the blog post, send it to your CPA. If they have any questions, again, there's a webinar, there's a contact team and everything. But I think by going with this checklist, I think everything, again, to Kyle's point, it's not that difficult. We don't want to make a big deal out of it, right? We just want to make sure you're prepared, you have everything that you need. And if you have any questions, you're welcome to reach out to us. Kyle, before I'll go over the last slide, any questions? Anything you want to add?
Just keep in mind, we've got that sample that Farhan's going to share with you. And you follow that for your 3468 and your 3800, you'll be good.
Perfect. So before I end the session, the one thing that I wanna talk about, first of all, thank you everyone for joining the webinar. Really appreciate it. Really good questions from Paul, Tupper, and everyone. And we'll send over the recording of this webinar so you have it in case you want to watch it again. Not the most interesting topic in the world, but in case you decide at 1 a.m. what to do, there's going to be this webinar recording. We'll also send over the link to the blog post in case you want to see, how the K-1, how you use the K-1, and then how the credits and the depreciation flows through from your other personal tax return. We'll also send you next week a link to the solar activities tab, so you have it. You could use it to log your material participation over there. Make sure you have everything in one place. The one thing, and again, you always have our email. We'll share our scheduled call link, so you have it over there just in case you want to schedule a call, you want to talk to me directly, you want to talk to Kyle. And before I end this call, I think we have 3 minutes, so I'll just cover this. So again, at the end of the day, we want to make sure that you have a seamless process, you have all the tax incentives, and not that after filing the taxes, you're going to be looking at another tax year where you're going to have probably a decent tax liability, and planning around that and looking at that, we are actually talk to the developers, and we are working with them, and we're giving out additional incentives, a higher percentage return if you make the purchase earlier in the year. So that is the incentives that we're focusing on, is to make sure we'll send over the incentives. But the idea here is, from developer standpoint, and from every standpoint that I could think of, is you want to make the purchase early in the year as possible, because that would give developer ample time for mechanical completion. That give you enough time to do your material participation. And what we're using as a catalyst is the higher post-flip percentage and a higher return, to make sure if you make the purchase earlier in the year, you get a higher return. And the return that we're talking about is additional 30+% return if you make the purchase later in the year. The incentives are based on whether you make the purchase in Q1, Q2, Q3. We'll send over the email. I think we have already sent it, but I can check with my team. We'll send over the incentives. If you are interested about that, there's still time. You're welcome to schedule a call with us. Your existing clients are very valuable. We can figure something out. But they just wanted to call that out, just wanted to put it out there, just to make sure that there is additional incentives if you make the purchase earlier in the year that could boost your return by 30% plus. If you're interested, happy to chat about it. But again, thank you everyone for joining. I'm gonna stop here to see if there are any questions regarding the incentives, regarding anything that we talked about that we can answer before we call it a day. Let's see if we got something. No, I think maybe wait for a couple more seconds, see if there's any question comes up that we can answer. Very good questions, by the way. Particularly on the NOL, I think it was good that we clarified from the OBB standpoint and also from the NOL standpoint. Oh, there's this question for are the incentives for staying with the current developer or more broad? It's a very good question. So there's this idea. So there's a current incentive that we're focusing on with the current developer. If you stay with that current developer, there's incentives because there isn't much of a lever that you can pull in the ownership. Right? You already own 99% of the assets for 6 years, so there isn't much you can do. When the partnership flip, that's the lever that mostly the developer can pull because they have the majority ownership in the project and they're willing to allocate you more ownership percentage by making sure you get a higher percentage of the cash flow. So that's the major catalyst. Currently, we're focusing on incentives. The same developer that you did the project last year will be broadly focusing on with other developer, but that's what we have in the pipeline right now. So, but good questions. Any other questions? I think Kyle, you and I have done a phenomenal job.
Good.
I think
Yeah.
80% with CPA. Yeah, I think I just need to give an exam and I'll be there. But really appreciate everyone joining. Really appreciate the good questions. Again, thank you for trusting Valor. Thank you for trusting the developer. We hope you have a great tax season. You file everything, get everything on time, and if there are any questions again, you're welcome to reach out to us at any point of time. You'll have our Calendly link. You'll have our email, and we'll see you all in the next webinar.
Yeah.
Thank you so much.
All right. See you.